Man, I totally spaced out. I'm not getting sleep. Hold on for one sec. Yeah, I'm not getting sleep. The last couple of days had a good workout yesterday. The to let you know on the inventory, the one trade that's beating me up a little bit is that XSP election trade. The one that's been messing me up, the XSP. This one right here. So what I was thinking about is this is a diagonal trade, turning it into a vertical spread by rolling the 582. It's in November 13th, the 582 November 14th. The thing about it is if I do that, I could get some more credit to take some of the losses off, which is what this is all about. Roll that. Okay, if I roll it to there, I get $23 or 23 cents of credit, and that'll knock it down to but this makes this an entire vertical spread, which means that it means that I mean, it's basically I mean, it's going to always be defined risk, but it's a lot harder. You have to hold on to the trade a little longer. The thing about this, if I keep it as a diagonal spread, the thing is I'm doing is I'm waiting to see if this market goes down a little bit. What that will do is get a little bit more volatility for me. If it goes down in the next couple of days, just a little bit, and being that their markets have went to the upside so fast, so hard, there is a possibility or probability this thing could go down. Because I mean, yesterday was just, of course, it was election. It was like a binary event. So usually markets like to fill those gaps. And if it does, we still have a few days. Okay, we still have till the 13th to make a decision. So that gives us about 6 days. So should this do that, then I can roll this and take some of the credit off and take some of the losses off of that particular trade. On the other trades, the deltas are pretty good on the other trades. There's nothing major. The VIX trade is out to December, so we got a lot of time before that one. Because those are the only two trades that are really, sticking out. Is the VIX and the EEM, which are kind of like, they're symbiotic because they're running together. Those trades do run together because they're the VIX and my delta short trade are are basically showing that this market is that I'm looking at a bearish scenario. Okay, I went and reloaded that X trade because I wanted to get it for 232 yesterday. Now the price went up today. So what that means is I'm glad I didn't get filled yesterday because that means I could get in at a higher price on this X trade. I moved the strikes to center the guy in the top of the mountain, but I did that. The rest of the trades are pretty much delta neutral. There's no, the VIX. I'm not really freaked out. It's still only 8 deltas. Um, XSP is delta neutral, but the thing is I mean, I should say it's four. It's not neutral. It's 4 deltas short. I mean, that's not good, but it's not terrible. The FXI is that's 9 deltas. That's a little bit out of there. But the thing about FXI is, even though it is 9 deltas long, that's a little scary. Only, well, I should say if it goes over 15, then I really start getting scared. But if I go into the analysis, I like to look where see FXI. Even though we have room to move things, so I'm not really freaked out because he's still around in the center. He's getting a little bit off the mountain, so I'm not going to freak totally. That's if he starts really, really getting down off the mountain, then I know we got problems. FXI is a China trade, and with Trump in office, who knows what that China trade will be. EEM, I'm not going to freak on that. The ones that I really, really, like I said, the only real two trades that I'm scared of are those two. SLV was the other one that we moved around. We're definitely long deltas, which means that of course, it's testing really bad our downside. Um, the thing is I'm not going to freak because of the credits that I pulled in. But let's see something on SLV. What I was saying earlier is being that SLV is 24 deltas, and I always like to even my deltas. If I move this 34 strike to 32, we're going to receive 21 cents or $21 in credit. Okay. The thing about that is I wanted to wait and see if we have some recovery to the upside in SLV. If we have some recovery to the upside in SLV, our credit goes up, so we could get more credit. It's the same. It's the same thing with XSP. You get more credits. Everything's about trying to get as many credits as you can. So that's what I'm looking at right now in terms of these trades. The ones that we're getting smacked down on, the two trades that are getting smacked down, of course, is the election trade, which is the XSP. We'll wait on that. Nothing major to freak out on because again, we still got 6 days we could actually turn this into a vertical spread to get some credits. And then thereby, instead of having, we went from $183 of risk to $122 of risk, and then we'll go back to $100 of risk. So we're knocking down the losses. And should this thing go down, then we'll even be able to knock down even more. So that's, kind of like, and today I wouldn't expect, not to say you should expect it, it's still Donald Trump's high in terms of his winning of elections. So you're going to get a bullish market. It's up 21 points. Maybe not as much as yesterday, maybe as much as yesterday. Who knows what Elon Musk will do? But, still yet folks are on that sugar high from their elections. And usually when they're on that sugar high from elections, it takes a couple days. And then for the reality to set in, plus you've got an interest rate decision today. Okay, that's going to be a big factor because it's basically going to be a quarter point cut. So with that and an election high, anything could happen. That would more than likely draw that SLV trade up a little bit, maybe not a lot, because gold and silver got destroyed yesterday. So if that interest rate cut affects the dollar, that should give a little bit more recovery to gold and silver. That's if it does. Because usually when that happens, they're trying to tamp inflation, which should bring dollar prices down. So that SLV trade, that's why I want to wait on that just to see how this decision comes in today, just to see if that is an effect. The other ones, it might mess up our XSP trade because usually interest rate cuts are bullish for markets. So we'll kind of wait on unless Jerome Powell is pissed off that Trump got in office and decides, you know what, we're not going to cut. Everything's already good. Markets are overblown. We're just not going to cut. You guys just had to deal with it. Then you're dealing with something different. You're dealing with an entirely new dynamic. Okay, looking for new trades. Again, I like to sell premium. Looking at new trades, high options volume. Go to the IV rank. Look at BOIL. That's that gas thing. I never traded it. I think it's a leveraged natural gas. Yeah, ultra leveraged natural gas. I never traded, but I just like to look at it, just kind of saying, "Wow, this is interesting." Again, this is about risk management. That's all trading is risk management. Hold on for one sec. So, looking at our inventory, looking at how that inventory is, we're managing SLV. In case market goes up, we'll bring those strikes down to get more credit from the 34 to 32. Manage FXI in case the deltas really get out of hand, because it's 24 deltas, so that is a little scary. But if deltas really get out of hand, we'll go ahead and move the strike up, that lower strike up to get more credit. VIX, we're going to sit on our hands because I'm not worried about VIX. The VIX trade, is until to December, and anything can happen between now and then. It's a defined risk. AKW, good to see you. And the other trades, and the XSP trade, we're going to turn that from a depending on where markets sit. If we do, again, we've still got a few days. I didn't want to stay in this longer than today, so I could get out of it today, which would possibly be more logical, or I could try to take some credit off and then get off today, which probably work just as well. I wanted to wait as long as possible before that rate decision to see if there's any movement, to give us a little bit more time for that credit to come in. Because the thing is getting more credit knocks down the losses. It takes the risk off the table. And what we did yesterday was perfect. Taking that rolling that strike to get, it took damn near, it took how much? About 40% of our credit off. It literally took, no, about, let's see, 30% of, we were able to make up 30% of the losses yesterday. We'll make up another maybe 2% today, or maybe a little over 1.5% today, depending on what credit we get. And we still have till to the 13th to make a decision. So we still have about 6 days in order to maximize more credits in order to mitigate losses. If I can knock down 60%, that's no problem. That's like, okay, whatever. You make that up in other trades. But the thing is it's always about risk management. Anyways, going into looking for new, again, we looked at the I don't have to overview on because this is what I showed you all the time. Go to the cost of capital, cost of fear, cost of commitment. You go through those. Okay, money is just up a little bit, so basically everything's flat. So we don't really need to go too buck wild. We know the VIX is down because of the sugar high in Trump's election. VIX is down. It's down 4%. It was down huge yesterday. What was it? Like 22% or something ridiculous. And that's a big move for VIX. It is what it is. Vivix and the other ones, I could go to Thinkorswim. That's for the tech heads and the fundamental guys. They really like to get real deep into it, and I do. But for today, I don't care. I want to get some new trades on. I got the X trade. I reloaded that. So we're in, trying to get that filled. We'll see if that gets filled. It didn't get filled yesterday. Boyle, I don't do. Patterson, I don't know what that is. Delta Airlines, a lot of these are red, which means volatility went down. So the Queen's not ready for that. SMCI, that's super micro. Let me take another look at this because it's got a lot of contracts. And I like that. But I didn't think, see, it's looking at an $8 move on a $8 move on a $23 stock. That's huge. Okay. That's like, 33% that this thing can, that this thing can move. That means the volatility is huge. And for something like that, I always want to see what had ever happened to the chart. What happened to it? Damn. It's just basically after earnings, it just, went down to the floor. Super micro, I just wonder what they do and why. Although earnings got hurt, before Trump's win, and it didn't get boosted by Trump's win. Super micro slumps and soft sells. Okay, JP Morgan turns bearish. I don't really care. It's just I'm just kind of interested in, wow, this thing just, shares fall, server misses sales targets. Okay, I guess in video everybody else is kicking their ass. What do they do? Application optimized technical IT solution provides a provider of accelerated computing platforms or application maximized. Okay, including artificial intelligence. Okay, it's interesting that SMCI is destroyed. But anyways, it is what it is. Let's take a look at it. This thing can move about $6 either way because the volatility is huge, and a lot of that is account for what happened in earnings. But the thing that I like about it is it had a lot of volatility and a lot of volume. 66 IV rank. Was that a 66 IV rank? 162% volatility. That's huge. That's like DJT stock. That's like Donald Trump stock stuff. But let's see where the risk is. Because chances are, you could get paid more. Let's see, 13 deltas. We'll move that to 15 deltas. And we'll move this to, wow, you got a lot of room up here. 19, 17, 19. We'll go 19 over here. I was going to try to move it lower. No, we could go 15 now. There's a few contracts, nothing major. So $1.99 at a $6, at a $7 is not enough for a strangle. And when I mean not enough, you're not getting paid enough for this. See if you're going to get paid enough if I go down to the 19 delta. I just want to get paid more for it. So 232. Now you're getting that third. If I went to 21, if I went to 19 deltas, you're getting close to that. You make it's an 87% chance that you're going to make at least 50% on this, which is what I like. You got you know what? I'm gonna go to 35 35. So you got 87% chance that you'll make at least 50%. You got $6 or $7 a day in theta, which is 10% of the or 1% of the buying power every day. So if you were in this 10 days, theoretically, you could make 10% of your buying power back. The probability of profit of making a penny or more is 71%. See, I like this. I like this trade. And this one, it ties up about $600 of buying power. What would happen if this thing in the next week expired in the next, or if I took it off in the next week? How much would I get from 231 to so $31? Let's go 2 weeks. Let's see if it'll populate. So 160. So that's basically that'd be wow. What is that like? From 231 to 160, what's that like $90? Or no, $70. Okay, that you can make in 2 weeks on this, which is basically, it's okay. You've got a 230 to 235 from your mid price to your natural, so it's not terrible. That means it's not a huge spread. It would more than likely get filled. So I'm going to see if I could go 231 because that's in between the mid and the natural, just to see if this market will move around there, and we'll just see if we could get in, just to try it. So we got that trade working, the 231. Again, now, you know what? Let's take a look, just as a very last thing, take a look at the mountain, because I always like to look at the mountain. Yeah, you definitely, if this thing shot up tomorrow, you'd be down 384. If it shot down to the downside, because you get more credit, you'd be down 111. Okay, but here's the thing. If you're down, you would move your strikes to get the credit. And that's the key. You move those strikes to bring that credit. And you just have to hold it a little longer. And which is cool. Because what you're doing is you're making money because of the credits that you receive on these. So the delta skew is definitely to the upside. In other words, the higher you go, it has to go longer for you, but you're going to make it up for it with the price that what you're paying in terms of buying power. If this thing went up from 23 and a half where it's at, or 23 right now, to 26, if it went up $3, we'll go 29, because remember, this thing can move $6. This thing would be down 149. If it went from 23 to $17, you'd only be down 45. So you're getting more money on the downside than the upside, of course, to hold this. You're getting paid more. So the volatility and price skew is definitely to the downside. So if we go, and one last thing, we're going to go implied volatility. If we go, let's see, how many strikes will we go out from 24 to 34? Implied volatility is 119. That's huge. From 24 to 14, implied volatility is 171. So 171 to 119. So you got more pricing on the downside. The 134, or it's 113 on the downside bid, and 34, it's 106. No, it's 116. So it's about close. No, wait a minute. Yeah, it's about close. But when I'm using deltas as this, your delta, you are 6 deltas long, and you do got a lot of gamma on this, because of the fact we basically have moved, we're closer to the downside than we are the upside on this. But I'm not going to freak, because that gives us, in case this thing pops, being that it's fallen so hard so fast, it could easily get up to the 38, almost to the 46. And if it got to the 46, then we would literally, that's beyond our short strike. I'm not saying it could do that, but I'm saying that, this thing can pop. It could easily pop. And that's why when I got this trade on, I wanted to get it on over the mid price, just so I could get the credit. So it's definitely over what we would be getting credit. But just in case it does go in our direction today, I want to be paid for, I want to be paid for taking the risk. Paid for totally taking the risk. And that's what this is all about. You always want to be paid for taking risk. So I'm gonna leave that on for a minute, and let's see any other trades. These are still red. I'm looking for the green ones. Tesla, that's back going up in volatility. The only thing with Tesla is I would have to do like an iron condor or something because of the cost of the security. It's a $289 stock. I don't like trading Tesla just because I'm not really a Tesla fan. I've traded it before, but when you're looking at moves, you see these moves, and these are not earnings moves. This last one was an earnings move, but these things can gap out of the blue for anything can happen type stuff, and that's not really. I don't like that. Like this is an election move. Chances are, once folks digest, it'll more than likely go back down. But Tesla's like Facebook, just a bunch of it's on the emotions and not necessarily in something that I really like to trade. Um, when I say emotions, it's like whatever Musk or Zuckerberg says, all of a sudden something happens. I can't handle that. Beyond Meat, I've never traded that. That's literally on the floor. Look at that, $5. Beyond Meat is literally a dead company. Uh, Even though, let's see, Beyond Meat, all the volatility stuff, except for the IV rank, is not high enough. Everything else is good. It had earnings yesterday, I think. Yeah, and it's chugging down to a dead stock. It's going to be a dead stock soon. Um, is it tradable? Weekly strikes, it is tradable. Let's see what we got. But there's nothing there. There's nothing there in terms of the price. $40 to there's nothing there. Beyond Meat is done. Uh, let's see. Unless I got directional, but I don't want to get directional. Yeah, Hood is another one that's done. I haven't done AT&T, Aurora Cannabis. I really don't care about cannabis stuff because that could go anywhere. Look, that's a $5 stock. I don't care, but I just want to see what it looks like. They got weeklies. Yeah, there's nothing there. There's no bid. There's no ask. No bid ask. It's a cannabis stock. There's nothing here. Let's see what else we got. Okay. Okay. So for selling premium, that's about all I see for selling premium. Okay. And being that I could buy premium, being that VIX is down so low, I don't mind buying premium now. So I'm going to reverse this. Yeah, see these low premium numbers. The SPY is definitely the XSP may have been a trade that I could take later because I might re-up on that trade because look at how low IV rank is on these IV index, IV rank. They're on the floor. I love that. And that's the reason we're getting, we're getting crushed right now because volatility crushed. But I love this would be a trade I might put back on the XSP, the one that I'm losing on right now. I may put that on because volatility is so cheap. But I'm gonna wait to this Fed decision. I'm gonna wait for stuff. Look at that implied volatility, 6% got wiped out just yesterday because of Trump alone. On this 6% on the spot on the SPX. Man, that's good. But anyways, as of that, hopefully you've been, going on those tasty works and learning that platform and looking at volatility and just looking at how things are. Hopefully that you've been able to do that. But like I said, I'm gonna make these things shorter and shorter because, like I said, most of the stuff I do only takes 15 minutes. I look at markets, I put in trades, and then I go away. So hopefully that works out. And I will talk to you later. Y'all take care. Hotep.